Trump has shared on Truth Social that he's implemented a 25% tariff on imports from both Mexico and Canada, 10% specifically on Canadian energy, and an additional 10% tariff on China. Market has reacted to that pretty strongly, starting with crypto first. It's obviously the main headline. We've seen liquidations over the last 24 hours as high as 2.3 billion in total, most of that being liquidated in ETH liquidation 600 mil, BTC 457 mil, and then all the other tokens. Sol only 85 mil. That was the one side of the market reactions. In terms of the stocks, German French stock markets down 2%. London FTSE 100 dropped a bit more than 1%. The pre-markets for the US stocks, which we've seen at -2, -2.5%. So pretty significant reaction when it comes to that too. The thing that I really want to get into is, what is a tariff? How does it work? What does it mean from a macroeconomical perspective? At least the tariffs can be super complex, but like at least the 101 on that. So basically, tariff is a tax that is added on top of that. It's added to the imports in that case specifically. I think the example that we've seen on the timeline was the Canadian maple syrup, which was, say, $100 before, slap a 25% tariff on that. The same syrup is now $125. Why does it matter? Obviously, as a consumer, as a customer, you might go to a different product. And this was one of the examples. Let me get that up on screen as well, that Adam brought up. So you have, let's look at this example specifically. You have two companies, an American and Canadian one, both making widgets for $10 each. You slap a 25% tariff on the Canadian one, it's now $12.50. The American company can increase the price to $11.50 and still come out as the cheaper option. That's obviously one of the ways this can play out. There are substitutes. You don't need to necessarily use, going back to the maple syrup example, maple syrup. You can use a different kind of syrup, or there is an American one that you can buy. So then there's this part of that. Then the additional complexity comes in from more complex supply chains when you just can't shift them around. And this is what you've seen playing out in the European stock markets, where the car makers have been hit very significantly. They have obviously a very complex supply chain with all the parts that go into making a car, and you can't very quickly say, oh, okay, this part we've imported from Mexico, we're gonna source that now from a country that is not affected by the tariffs. So these things also take time to change. And the typical result of tariffs is then obviously that the cost gets passed on to you as a customer, as a consumer. Then there's been a lot of talk on the inflation side of things, and the inflation side of things is a bit more complex. It's going to be a bit of an explanation on that, because that is relevant in as how the market will react, how
let's do it.
The interest rates will react, because I've seen it argued both ways. Fed will have to raise rates, Fed will have to do quantitative easing. So if you look at those two charts that I'm sharing on screen, I'm going to zoom in a bit more from a Forbes article. So what you typically have is when you impose a tariff, the price goes up immediately. So you will see this is this chart. You have a steady inflation rate, you have a tariff that gets implemented that pumps price up, but then the inflation rate per se stays constant unless the tariffs get increased more and more over the coming years. Whereas this is like the chart how a basically increasing inflation rate would look like. So that is one important thing to keep in mind, that this impact of tariffs is something that the market sees playing out pretty quickly in terms of the price actions. It's like more of a one-time effect. However, it still means that companies are facing higher costs. There's still this inflation fear, because tariffs can obviously, the war can escalate. You have retaliatory tariffs coming back from Canada. Trump would still have the move to raise tariffs even further. And that is something that he has threatened with Colombia before. He said, I'm going to just increase tariffs by another 25% every week until you do what I want you to do. So there is exactly more uncertainty, because nobody really knows how far he will push that, which also results, because just the American economy is so much bigger than the Canadian or the Mexican one, in the dollar being a specifically strong currency. Look at the American to Canadian dollar exchange rate, trading at 147 right now, at a very historical low. I think, since 20 years for the Canadian dollar. So it is directly impacting that. I think Kashmir also had made the point in the YouTube comments like 10, 15 minutes ago that this is putting the dollar in a very strong position, but still you have inflation fears, you have this risk off mode, which you see for playing out for stocks, which you see playing out for crypto, because you just don't know how much further this will go. Is it really just a show, as you said, B? Is it something that he's willing to keep up until Mexico or Canada are giving in? And it's also, if you have tariffs that are specifically like flat tariffs like this covering everything, it makes investing way less attractive. Or it also puts then the pressure on companies to cut costs at some point, which then again could lead to unemployment rising, which then could push stocks down even further, and at some point then sustainably push inflation up. So the Fed would have to react. At some point, there might be a rate hike even coming until you might have an event that forces later on quantitative easing. So the key thing, I think, is tariffs are super complex, and there's a lot of like strategies how different markets will react, trying to substitute products, trying to adapt supply chains, not being able to do that and pass on prices. Because Trump can push this way further, this is the major reason why we see that like FUD in the market, because we just don't know how far and how long he's willing to sustain this this game theoretical political warfare. And the immediate result of that is that the market wants to go risk off assets. And also in the short term, this is, and that's a point that a couple of people have making, this is not necessarily, also Kruger Marker has been making that point, this is not necessarily bullish for Bitcoin in the short term. Again, we're not talking about like all the other good things and the Bitcoin reserve that might be coming as well. We're just talking from the like general market theory that this is typically causing a flight to risk off assets and not a flight into risk on assets. And especially it's not, there's no like mechanism that would want to make you buy Bitcoin specifically as a result of that. It's not like, oh, inflation is high, I'm going to flee to gold, I'm going to flee into Bitcoin. That's not the same here.